Hello and welcome back to Katie's Businesses. Michael Lapete here to talk to you on a video about frequently asked questions on general partnerships. The first question we get is, what is a general partnership? A general partnership is a business that is established by two or more partners. Now, these partners may be individuals, they may even be incorporated. They may be two corporations that are partnering, or three corporations that are partnering, or two individuals in a corporation, or three individuals. It's a group of partners that have agreed to partner at a certain percentage, whatever percentage is agreed to, and they're going to partner together and form that general partnership. Second question is, do we need to register a general partnership? In Canada, you may choose to register a general partnership either provincially or federally. So the answer is you should register a partnership. I do know some partnerships that are not registered. We prefer the registered because then they stand obviously up as a registered entity. Even though they're not incorporated entity, it's still a registration to prove the partnership. And the other thing is we got to remember at 30,000, doesn't matter what type of business, you have 30,000 in sales, you must register for GST, no matter if you're a partnership or any other type of business. The next one is, do I need to incorporate if I have a general partnership? And the answer is no. You, as a partner, do not have to incorporate, but you can. It is up to you, right? If you're not incorporated, then it'll operate very much so you're the partner and the income comes to you. If it's incorporated, the corporation will be the partner and the income will come to the corporation. And of course, as we know, there's several advantages to incorporating too as well that we've talked about in other videos. We won't get into here, but there are advantages to incorporating. Next question is, how does a general partnership file taxes? Well, owners of the partnership must report the taxes or report the income and pay taxes on their personal tax return if they're an individual, and a corporate tax return if they're a corporation, and so forth. So depending what type of entity or individual is a partner, they report that income from the partnership, their portion of the partnership, whatever percentage that is, on the appropriate tax return of the partner. There are no separate tax returns for the business unless the business earns more than $2 million. So if the business earns more than $2 million, there might be some separate tax returns filed for the general partnership. And owners will pay tax at whatever tax rate is on the tax return. So if it's an individual, it'll be your overall tax rate. If it's a corporation, it'll be your corporate tax rate. Okay. Next question we get is, what are legal considerations of starting the general partnership? Keep in mind the decisions of one partner makes on behalf of the business is binding for the other partner. So there should be a legal agreement in most partnerships. It's imperative to protect yourself. And just like sole proprietors, there's no liability protection from losses of general partnerships. So be very careful. The partners are responsible for the business. So you're taking all that liability as well. So again, another reason maybe to incorporate. And the last one is, what is the difference between a limited partnership and a general partnership? A limited partnership is similar to a general partner, similar to the general partnership, but it has partners who invest in the business and aren't involved in it and don't take liability. We're going to get into that in the next video. If you got any questions, we'd love to hear from you. Post in the comments below and we'll see you back here in the next video.